From the following information, complete the balance sheet of XYZ Limited for the year 31st March 2022. They've given us the current ratio. Alright, and remember the current ratio is equal to current assets upon current liabilities. Okay, so current assets upon current liabilities gives us 2.5. The liquid ratio, which we also call the asset test ratio, which is also called the quick ratio, is equal to quick assets upon quick liabilities, and we know that that is 1.5. Now why am I writing 2.5 and 1.5? Because for once they're giving it to us just like that. Even if they had said is to 1 like this, even then it's the same thing. Okay, so 2.5 is to 1 is as good as saying 2.5 divided by 1, and anything divided by 1 is the same number, so we don't bother with upon 1. Anyway, here we are. Proprietary ratio is equal to proprietor's funds upon total assets, which we've been told is equal to 0.75. Working capital, okay, and let's see, I'm just going to do it here. Working capital is equal to current assets minus current liabilities. And reserves and surplus is given to us, bank overdraft is given to us, and they've told us that there's no long-term loan of fictitious assets. This is a simple question. Okay, I'm going to go to the right and start building the balance sheet. Okay, so let this be our border between these two imaginary pages. And here we go. Alright, so the name of the company is XYZ Limited, and the balance sheet is for the year ended 31st March 2022. Okay, so we have, let's see, Messrs. XYZ Limited, and balance sheet as at 31st March 2022. We have liabilities. Okay, and let's start building the table. We have liabilities and amount. Assets and amount. Now, all sums should have equity, share, capital. Most sums will have reserves and surplus. Then you have borrowed funds. Okay, in this question they have told us that there's no long-term loan, so therefore we assume no borrowed funds. We've been given bank overdraft as 20,000. So reserves and surplus 40,000. Bank overdraft 20,000. Alright, and let's see, 20,000. And now, what else do we need? we do not have any other number directly given to us, so we can start solving. Okay, and I'm going to start with what we have here and what's given to us here and elaborate it here. Okay, so I'm going to scroll down slightly so that we have space, and I'm going to rewrite both of these with short forms. Okay, so first of all, we know that working capital is equal to current assets minus current liabilities, which is 90,000. So I'm just going to say CA minus CL is equal to 90,000. And I also know that the current ratio, which is current assets upon current liabilities, is 2.5. So CA upon CL is equal to 2.5. And we can take this further, where we can say that CA is equal to 2.5 CL, and then substitute this value into that equation. Okay, so I'm going to write 2.5 CL minus CL. Alright, so in the place of CA, I'm going to put 2.5 CL. Okay, so 2.5 CL minus CL is equal to 90,000. Therefore, 1.5 CL is equal to 90,000, and therefore CL, or current liabilities, this is 90,000 upon 1.5, and let's use a calculator. Alright, so we have 90,000 upon 1.5, which gives me 60,000. So I now know what all the current liabilities are equal to, 60,000. There is simply no information for me to break it down further. But yes, you need to keep in mind that the liquid ratio is quick assets upon quick liabilities, and I can further say that quick liabilities is equal to current liabilities minus bank overdraft. Okay, so that means if I know that current liabilities is 60,000 and the question tells us that the bank overdraft is 20,000. So I'm going to take 20,000 and subtract. Therefore, quick liabilities is 40,000. Right, so with as much detail as possible, we will put data into the balance sheet. Okay, so bank overdraft 20,000, quick liabilities is 40,000. Now, going further, we have made use of the current ratio, we have made use of working capital, reserves and surplus was directly given to us, bank was directly given to us. What else do I need? I need to know what the total assets are. Current assets are found. There's no further information with which I can break it up. If I want current assets, what do? I know that current assets is equal to 2.5 current liabilities. Therefore, current assets is equal to 2.5 times the 60,000 over here. Okay, which is equal to 60,000 multiplied by 2.5, which is 1,50,000. Alright, so I can go to the balance sheet. And there should be fixed assets or other assets if you want in the question. Okay, and fixed assets, and I know current assets is 1,50,000. Now the problem is I need to get this number, and this guy is missing. But I know that total assets is going to be equal to fixed assets plus current assets. Okay, and I'm going to write that down once for your reference. Okay, total assets is equal to fixed assets plus current assets plus investment plus fictitious assets. the question specifically says, okay, if you have a look at the last adjustment, there are no fictitious assets, and neither has there been any mention about any form of investment. So I can assume that both of these numbers are 0. Both of these values are 0. Therefore, total assets is going to be nothing but fixed assets plus current assets. Okay, so I'm going to use short forms now. Total assets is equal to fixed assets plus current assets, and out of these total assets, I do not know fixed assets, but I know that the current assets is 1,50,000, which is what we put into the balance sheet over here. Okay, so further down, 1,50,000. Now, why is this being done? Because we have with us the proprietary ratio, which is proprietors funds plus total assets. Okay, so the proprietors funds upon total assets is equal to 0.75, and that's what's given to us in the question over here. Okay, so 0.75, and you need to keep in mind that proprietors funds is equal to equity share capital plus reserves and surplus. Okay, and do we have equity share capital given to us? No, we don't, but we have reserves and surplus as 40. Okay, so within proprietors funds, we can say that it is equal to equity share capital, which we don't know, plus 40,000, which we do know. Okay, so this is going to be a slightly tricky solution where we have proprietors funds with one unknown, and we have total assets with one unknown. So to be able to effectively solve this sum, we need to be a little careful with the way in which we frame the next equation, because we've been given information that there's no long-term loan. Okay, you need to keep in mind that you have a proprietors fund, you have the proprietors fund. Okay, and we're sticking to PF, so proprietors fund is what is being used. There are no loans. So proprietors fund is all that's being used to buy fixed assets and current assets. But if you're buying stock, you can take it on credit, and therefore you do have current liabilities, which you can keep on the left hand side or put it on the right hand side. Either way, proprietors fund is equal to fixed assets plus current assets minus current liabilities. Proprietors fund is equal to fixed assets minus working capital. Okay, and do we have working capital given to us in the question? 90,000. Like that we had CA and CL also, but let's keep it as basic as possible. Proprietors fund is equal to fixed assets minus our working capital, which is 90,000. Okay, minus 90,000. Okay, and the reason I'm doing this is now we have one equation where proprietors fund is equal to fixed assets minus 90,000, and our second formula is going to rely on the information that we have as far as our proprietary ratio is concerned. Okay, so remember that the proprietary ratio is equal to proprietors funds upon total assets. Alright, so if we know that proprietors funds upon total assets is equal to 0.75 and I want fixed assets, how do I isolate fixed assets? I know that total assets, okay, and have we done it before? I know that total assets is equal to fixed assets plus current assets. Total assets is equal to fixed assets plus 1,50,000. Okay, and what goes into this formula? total assets. Okay, so I'm just going to take fixed assets plus 1,50,000. Okay, so fixed assets plus 1,50,000 is our total asset. So proprietor's fund upon fixed assets plus 1,50,000 belonging to the current assets is equal to 0.75. So I've got one equation in terms of proprietor's fund and fixed assets. I have another equation in terms of proprietor's fund and fixed assets. And now solving this becomes easy. Now we have proprietor's fund is equal to fixed assets minus 90,000. Proprietor's fund upon fixed assets plus 1,50,000 is equal to 0.75. And I'm simply going to replace proprietor's fund with what we have over here in this equation. Alright, so I have fixed assets minus 90,000 upon fixed assets plus 1,50,000 is equal to 0.75. Now, what we have over here is division, goes that side, it becomes multiplication. Okay, so it's going to be fixed assets minus 90,000. Fixed assets minus 90,000 is equal to 0.75, open brackets, fixed assets plus 1,50,000. Okay, so fixed assets minus 90,000 is equal to 0.75 fixed assets plus 0.75 into 1,50,000. So 1,12,500. Okay, so 1,12,500. And now 90,000 over here subtraction, it goes that side, it becomes addition. 0.75 over here is addition, goes that side, it becomes subtraction. So fixed assets minus 0.75 fixed assets is equal to 1,12,500 plus 90,000 plus 90,000. So 0.25 fixed assets is equal to 1,12,500 plus 90,000. Okay, so 1,12,500 plus 90,000, 2,02,500. Okay, so we have 2,02,500. Fixed assets therefore is equal to 2,02,500 upon 0.25, which is equal to 2,02,500 upon 0.25, let's see, 8,10,000. Okay, so we have fixed assets as 8,10,000, and now we go ahead and we do the math for the missing figure. Alright, so we've been able to calculate fixed assets. Now we can calculate proprietor's fund. Making use of any of these formulae, I'm going to make use of this one. Okay, actually even this one would make life easy, the first one. Alright, so I'm just going to make some space over here. If I know that proprietor's fund is equal to fixed assets minus 90 and that my fixed assets is 8,10,000. Okay, so proprietor's fund is equal to fixed assets minus 90,000. Therefore, proprietor's fund is equal to 8,10,000 minus 90,000. Therefore, proprietor's fund is equal to 8,10,000 minus 90. Okay, on the calculator, minus 90 gives us 7,20,000. Okay, and hopefully this solves a jigsaw puzzle. 7,20,000 is my proprietor's fund, but I know that my reserves and surplus is 40,000. Okay, reserves and surplus is 40,000. We know that proprietor's fund is equal to equity share capital plus reserves and surplus. Therefore, 7,20,000 is equal to equity share capital, which I don't know, plus reserves and surplus, which is 40,000. Therefore, we are saying that equity share capital is equal to 7,20,000 minus 40, which gives us 6,80,000. Okay, so 6,80,000 is going to be our value for equity share capital, 6,80,000. And one more time, we got a value of 8,10,000 if I'm not mistaken. 8,10,000 as our fixed assets. Fixed assets is equal to 8,10,000. Right, so going back to the asset side, fixed assets is 8,10,000. Hopefully this will tally. Okay, and yeah, the right hand side seems to be, the asset side seems to be low hanging fruit. I think this is going to give us 9,60,000. And now for the moment of truth on the other side, 6,80,000 plus 40 plus 20 plus 40. Okay, and this does not tally. From the following information, complete the balance sheet of XYZ Ltd for the year ended 31st March 2022. We've been given all of these ratios, some numbers directly that can be placed in the balance sheet. Before we begin, just keep in mind that there seems to be a mistake in this one ratio given to us. The proprietary ratio, is supposed to be proprietors funds upon total assets. However, if you try solving using this formula, you're going to get an answer in which the balance sheet will not tally. After having a look at the solution, what they mean by the proprietary ratio is actually what we can call fixed assets to proprietors funds. Alright, so don't think of this as proprietors ratio. It is fixed assets upon proprietors funds. Proceed on this basis and you're going to get a correct answer. Now, current ratio is equal to current assets upon current liabilities. Quick ratio, also called asset test ratio, also called liquid ratio. Okay, liquid ratio is equal to quick assets upon quick liabilities. Then we've been given the fixed assets to proprietary funds ratio, which is 0.75, which I'm leaving on top. Working capital is equal to current assets minus current liabilities, which is equal to 90,000. Then we've been given reserves and surplus and bank overdraft, which items we can directly put in the balance sheet. They've also told us that there is no long-term loan or fictitious asset. Now, keep in mind the proprietors funds itself, proprietors funds is equal to equity share capital. Equity share capital plus reserves and surplus. Alright, now continuing with our calculation, we know that current assets upon current liabilities is 2.5. We know that quick assets upon quick liabilities is equal to 1.5. And we are going to make use of the current ratio and working capital formula in order to calculate current assets and current liabilities. Okay, so the fact that we have got CA upon CL is equal to 2.5, that's as good as saying that CA is equal to 2.5 CL. Okay, so CA minus 2.5 CL. Okay, how would we do this? We can substitute in the place of CA CL. Okay, so instead of CA, I'm going to write 2.5 CL minus CL is equal to 90,000. That means 2.5 CL minus 1 CL is equal to 1.5 CL, which is equal to 90,000. And now I can get myself CL as 90,000 upon 1.5. Okay, which gives us, let's see, 90,000 upon 1.5. Okay, so current liabilities is 60,000. Okay, current liabilities is equal to 60,000. Then if we've been given current assets upon current liabilities as 2.5, okay, that means we can say that current assets upon 60,000 is equal to 2.5. Alright, so that would imply that current assets is equal to 2.5 into 60,000. Okay, into 2.5 into 60,000, and therefore current assets is equal to 60,000 into 2.5, which gives us 1,50,000. 1,50,000. Alright, so we have got ourselves current assets, we have got ourselves current liabilities. We are now in a position to proceed and do the math for calculating fixed assets. Okay, because we have got ourselves proprietors funds, we have got ourselves a ratio, and because they've told us there's no long-term loan or fictitious assets, we can actually come up with a formula where we say that the proprietors funds plus the current liabilities, because that's all you're going to get on the liability side, is equal to fixed assets plus current assets. Okay, and when you think about the proprietors funds, we know that the proprietors funds is equal to equity, share capital plus reserves and surplus, but we'll get to that later. Proprietors funds plus current liabilities I've just found, 60,000, is equal to fixed assets, which I do not know, plus current assets, which is 1,50,000. Okay, I have this formula in place, and now we can derive a formula where proprietors funds minus fixed assets is equal to 1,50,000 minus 60,000. Okay, so I have a formula where proprietors funds minus fixed assets is equal to 90,000, and at the same time on top I know that fixed assets upon proprietors funds is 0.75. Fixed assets upon proprietors funds is equal to 0.75. So that means I can say that fixed assets is equal to 0.75 proprietors funds, and I can then do proprietors fund minus, okay, minus 0.75 proprietors funds is equal to 90,000. That means 0.25 proprietors funds is equal to 90,000. Proprietors funds is equal to 90,000 upon 0.25, which is equal to, alright, and I can take 90,000 upon 0.25, which is 3,60,000. Now, if I've got myself proprietors funds as 3,60,000, and going back upstairs, we had established a formula for proprietors funds as equity, share capital plus reserves and surplus. Okay, and I'm going to do this here. Alright, I have 3,60,000 is equal to equity share capital plus reserves and surplus. I have a value 40,000. That means my equity share capital is going to be equal to 3,60,000 minus 40,000. Okay, and that gives me 3,20,000. So I've got equity share capital, I've got myself reserves and surplus, I have current liabilities. I can now get the last part, which is fixed assets. Okay, and I know that fixed assets is equal to 0.75 times the proprietor's fund. So fixed assets is equal to 0.75 times 3,60,000. Okay, which is equal to 2,70,000. With that, we have everybody we need in order to make the balance sheet. Okay, so I'm going to go to the right and I'm going to write the name of the company. The name of the company, XYZ Ltd. Balance sheet for the year ended 31st March 2022. Okay, so here we go. Messrs. XYZ Ltd. Okay, then we have balance sheet as at 31st March 2022. Okay, and we have liabilities, amount, similarly assets and amount. Alright, and we know what we've calculated. Alright, I'll just have to take a quick lunch to have a look at the numbers, but otherwise equity share capital, reserves and surplus, reserves and surplus. We've been given bank overdraft directly. Okay, bank overdraft has been given to us, and keep in mind that current liabilities, if we want to isolate quick liabilities, okay, so quick liabilities is equal to current liabilities minus bank overdraft. So I can literally take whatever has been given to me as bank OD, subtract, and I'll get what is left as quick liabilities. Or you can write other current liabilities also. It doesn't really matter as long as this balance sheet tallies. Okay, so now on the asset side, I have fixed assets and current assets. So now we are in a position to fill up the data based on the answers that we already have. Okay, so we have current assets and current liabilities. Alright, our current assets is 1,50,000, current liabilities is 60,000. Bank overdraft is 20. That's important because bank overdraft being 20 means only the remaining will be quick liabilities, 60 minus 20, which will give us 40. Okay, so current liabilities are looked after. Now, as far as current assets are concerned, it's going to be 1,50,000. So over here, we have 1,50,000. All right. Now, going forward, we have equity share capital as 3,20,000, reserves and surplus as 40. So equity share capital 3,20,000, reserves and surplus 40. The liability side of the balance sheet is ready. The asset side, I just need fixed assets from the bottom. Fixed assets is 2,70,000. Fixed assets is 2,70,000. And now we tally the balance sheet. Alright, so 2,70,000 plus 1,50,000 should give us 4,20,000. Okay, and on the liability side, let's do the math. 3,20,000 plus 40,000 plus 20,000 plus 40,000. Okay, 4,20,000 on both the sides. Your solution set has it in the vertical form. It doesn't really matter vertical or horizontal unless they specifically ask you to do using schedule 3 or do it on the basis of vertical. Alright, this again has been a very long sum. Okay, ratio analysis is very tedious. For those of you who are still with me, I hope you found this useful. Please like, share and subscribe. Thank you.